Good morning, everybody. It's the 19th of October. We're Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Morning, mate. Yeah, very good, thank you.
Excellent. Good to hear. Okay, off to a bit of a bumpy start this morning as a result of the numbers coming out of the UK with regards to inflation, but we'll get to that in a minute. First of all, go through the rest of the headlines affecting markets over the past 24 hours. So first up, the German economic expectations improved slightly. The German ZEW index confidence investor confidence index recovered slightly to minus 59.2 for October from a previous reading of minus 61.9, and that was stronger than the consensus forecast of minus 65.7. So that was pretty good. In terms of the US housing index, that, however, was at a 2-year low. The index declined to 38 for October from a previous 46. And all components weaker on the month. US yields edged higher yesterday. Treasuries posted losses on Tuesday, with the 10-year yield trading above the 4% level, which continued to provide further dollar support. And then we saw Wall Street post further gains. Although yields posted net gains, there was a further net advance on Wall Street with support from latest earnings data. The Bank of England stated that quantitative tightening will start on November the 1st. There was a further shift from the Bank of England on interest rate expectations, with markets now expecting a peak in rates at just above 5%, compared with 6% at the height of the bond market selling. The central bank denied that there would be further delays in enacting quantitative tightening program, and stated later that the first gilt sales under the program will take place on November the 1st. The UK inflation number this morning has increased above 10%. The headline CPI inflation rate increased to 10.1% for September from 9.9 previously, and slightly above the 10% consensus forecast, with the underlying rate at 6.5% from 6.3%. So, as I say, a bit of a bumpy start in some of the markets today, and we'll get to those shortly. While the stream's ongoing, if anybody wants us to take a look at any particular markets that we don't generally cover, please feel free to ask on the TradingView stream, and we'll do our best to get to those. But in the meantime, I'll hand over to Steve, and he can run us through some markets this morning.
Lovely. Cheers, Joe. Not really a lot to dive into on the Bitcoin side of things. Not really a lot has changed. We've had a little bit of movement, as we can see on this is the daily chart. We're still hanging around this big support area between 17,600 and 18,700. That's the area where we seem to get down to and buyers start coming in. Really, over the short to medium term, I'm looking for a break of this level. However, there is this sort of possibility that if we don't manage to break this very soon, then buyers will have a bit more confidence, and we could see a little bit of a correction to the upside. So really need to trade a break in this. While it's trading within the range 17,600 to 20,500, it's a bit of a guessing game. So a break of 20,428, that's the level here I'm showing on the chart. Let me just drill it down a bit more. Let's get a line in there so it identifies it a bit more clearly. Actually, let's call it 20,526 just to be safe. I know you have to having specific levels is easy to say, and also it's not really a good thing to do. Have areas of resistance and support, and really we need to close above this level to really sort of make me think that we've got potential for some upside. Otherwise, I'd look to be selling into rallies all day long for this. XRP is the one bright spark that I've noticed on the cryptos, and this is the inverse head and shoulders formation, which is played out really nicely. It got very close to the measured move target of 58 cents, got up to 56 cents. That was a potential target once we broke 39 cents, so a nice move to the upside there. But since then, it's forming a bit of a triangle formation, so that, again, a 50-50 shot. But I would think about really sort of getting some exposure on this. On the upside, if we manage to break above that 56 level, or even if we start to sort of like push above the 54-55 level, there is good potential for the upside. That'll be a bullish flag formation, and that could see again potential for a decent move for about another 25 points, probably take you up to around about the 67 area at the minimum. So yeah, just again, another one to watch. It's under pressure at the moment, trading around 45. And this is always one in the news, XRP, the Ripple law case that's going on in the US, still waiting for some sort of resolve from that, but we're not going to get it anytime soon by the looks of things. I think we have to wait for the usual culprits, the big banks, to sort of get long, and then they'll sort of come out with a resolve. Instead of conspiracy, let's talk about gold. This is still in this bearish channel, has been in the bearish channel since we got close to the all-time high. If we remember, the all-time high was posted back on August 2020. We got very close to it, stalled by about $5 in March 22. However, this indicates the potential for a double top. Now, the neckline of this level is 1677, and we traded below it and had a nice recovery back up, and we formed this bearish channel, and we're on the move down again. Under pressure this morning, trading around 1637. The closest support we've got is 1615. That was the swing low of the 28th of September. A break of there definitely opens up the downside, and the measured move target for the double top is a move down to 1361. That would be a bit concerning if we did break down there. That would be a market event of some sort, really, to sort of like catapult the gold down there. Support area before there for me is 1440. That'll be a 61.8% fib retracement of the entire up move. So there is support in between. However, and 1560 is a 50% retracement. So one to watch, but don't really want to be concerned about that until we get a break of 1615. On the shorter term levels to watch, we're sort of below the Ichimoku cloud, so we're short term, we're bearish. The momentum is down to the downside, and really sort of resistance coming in around about the 1685 level. So selling rallies into there, not a bad idea, and 1730.35 above that. So as we see, this 1615, I'll mark it on the chart as well to give it a bit more clarity. That's the level to watch there. A break of there, and it will open at the downside again. This is a bit of a old trend line. We'll get rid of that because that confuses matters. So yeah, the Ichimoku cloud looks a bit messy, but it's a trend following indicator. On the crude oil side of things, obviously we got oil inventories out this afternoon, so it's one to watch. We should get some more volatility in oil. Not that we need any more volatility in oil. Let's take a look at the weekly chart, and let me just get rid of this volume profile. And again, we are moving to the downside. We had a really nice reversal a few weeks ago, highlighted nicely by TAF on the show. This is a morning doji star formation, and that indicates a bottom. We had a really strong rally, and this was confirmed by this green candle here. However, since then we have had this pullback. From a percentage basis, the pullback has been just around, let's scroll it out here, just over 68%. Let's see where we are. Sorry, 61.8%, 82.37. That's the level of support that we've got in the chart at the moment. Again, the low of this green candle week, 80.85, is significant. A break of there, and we should test the downside once more, which is around about $76. So they're the real sort of like levels to watch. It will be highlighted a bit clearer, maybe on the 4-hour chart. We've had this nice rally up. Let's get a 61.8 in there. And we can see we broke down below the 61.8, formed a doji, candle of indecision, and then a bullish hammer. So it looks like it's trying really desperate to hold around these levels. But with the oil inventories this afternoon, I think it's we're expecting a $1 million build. Have to check that. Don't take my word for it, but it's something I read, I think, earlier. So yeah, anything less than that, then, or significantly less, we could get some move to the upside. But there's a lot of shenanigans going on in the crude oil world and the oil world with the the Russia-China situation and the Nord Stream pipeline, etc. It's all an energy crisis, basically. That's what we're in. Talking about energy, let's take a look at natural gas. Now, this is really, really under pressure, and it's something which we looked at from, we've been looking at sort of quite closely. We've potential for a double top formation. It is a long way off, so don't get too excited about this one. I hate that little orange color that it brings up. So there's the first top, and oh, it's all gone a bit skew-if. It's not letting me do it, Joe. Look at that. It's really telling me it's going down, I think. So there we go. There's the double top formation. The neckline is $5.35. So that's significant from a support perspective. A break of there. Again, let's take a look at where that is on the Fibonacci. 535. Yeah, it doesn't really sort of like flag up anything massive on the Fibonacci levels. So not really any sort of, let me just get rid of this. This was from the Fibonacci's perspective, we have got the sell-off from 1430 all the way down to 153. The 61.8% fib came in at $9.40. I think we got up to $10. That was the high, well, just close to $10. That was the high before we had this evening star formation, and then the major sell-off. So 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks of negative price action in natural gas. So still under pressure. Looking really to target this 535, I think. Joe, happy to hand it over to you to get some FX before I dive into maybe commodity indices.
Thank you very much. Okay, dollar index to start then, still on a decent uptrend as we can see here on the daily chart. In terms of yesterday's price action, it was quite quiet really. Posted a doji looking candle on the session. Pushing higher today, up by 0.35% as things stand. I did highlight the potential maybe that we are forming some sort of top here in the dollar index, but it needs to do a fair amount more before we can get excited about that. For me, we need to take out this support at around 110. 00, and if we can do that while simultaneously taking out the long-term uptrend, then there may be some scope for a corrective move to the downside. But for now, expecting prices to remain range bound between 110 to 140.77, so quite a large range, and still got an underlying bullish bias. In terms of the intraday on dollar index, just take a look at some support and resistance levels. Just get rid of that. So in terms of short-term resistance, we've got one at 112.45. This is the previous high posted in yesterday's session. Above that, I've got one marked on the chart at 112.69. So what you can potentially see here is some sort of top pattern, maybe in formation at the moment on the intraday charts, maybe some sort of head and shoulders type candle, formation that could be taking shape there. I think if we can get above this level here at 112.69, then that would probably invalidate that, and we can start looking for higher prices once again. On the downside, at 111.73 has been highlighted as a short-term support, and then below that down at 110.77. So maybe levels to keep an eye out for today if you are attempting to trade this on an intraday basis. Looking at euro US dollar, back to the daily chart to start, we've got prices still remaining within this bearish channel. Very neat indeed. No signs of that slowing. Overall still looks very bearish. We've got resistance up at 99.55 in the short term, which if that can overcome and then simultaneously break out of this channel to the upside, then we may see further upside in the short term. For now, I'm expecting prices to continue to remain within this range and for lower prices ultimately to be seen. In terms of the intraday on here, support and resistance levels, we've got a big zone of resistance here around 98.59. Price is unable to get above that. We saw it again yesterday, and then we saw this big move to the downside. So over the last few hours, it has been really negative for euro US dollar, and now into a short-term support at 98.16. If that fails to hold, we've got another support at 97.99 that we'd be looking to potentially do a job. Ultimately still remaining bearish on that. Then looking at cable, let's have a look at what that's doing today. So again, downtrend very much confirmed. We've seen a decent move to the upside over the last few sessions, but it seems to be rallying into resistance at 114.10. Above that, we've got a level at 114.95. Now, we've had this inflation number due out today, and that has triggered some selling in sterling based currencies, down 0.41%. This is the worst of the sterling bunch at the moment. Still of the opinion that we're going to see lower prices based on the fact that we've got this long-term downtrend in place. For me, we need to see some serious moves to the upside before we can get too excited about a recovery. I think above 114.95 would maybe complete some sort of double bottom pattern and then project higher prices over the short to medium term. On the intraday setup, got a couple of support and resistance levels highlighted here. The first one being this gap that was created on the 16th, so on Sunday night. So from the Friday close to the Sunday open, we've created a gap, and that's at 111.86. So that for me would be a decent target to look for on the downside. If you are looking to buy dips in cable, then that may be quite an interesting level for you to take advantage of. Below that, we've got support at 111.38. If these levels fail to hold, then that for me would indicate we are going to see a continuation lower. On the upside, a couple of levels here, 114.30 and 114.90. Moves above those levels, then we may see more upside in the short term. Sanadine is asked to take a look at sterling yen. So let's do that. And if there are any other requests out there, please get them in soon. So this is the daily setup on dollar yen. And we've seen a break above resistance at 168.
Sterling yen.
Sorry, sterling yen. We've seen a break above 168.43. So marks here by these previous swing highs, going back down to the 20th of April, then again on the 9th of June. Decent break to the upside, nice close above that on a daily basis, and now we are pulling back to retest those newly formed supports. So hopefully we will see this do a job. And the bulls will come in to rescue it and continue to push it to the upside. That is a nice breakout. From a technical perspective, buying pullbacks to retest the newly formed support is the preferred strategy. If you're looking for further evidence of buyers stepping in, I mean, if you look at yesterday's candle, we can see that prices moved to the downside below that level of support before closing well above it. So that is quite an encouraging sign. A little bit of weakness today, given that we've had this inflation number, but maybe a decent opportunity there to buy, targeting a move up to this level here, which is at 174.75. If I go to the weekly chart, we can have a look at why that level is relevant. We need to go all the way back to this level here, which was in April 2015. Where we saw a big breakdown, then a retest of that level. So it was a good level of resistance that's worked previously, and may it do so again. So that would be my medium-term target on sterling yen. Obviously, it's all over the place with sterling at the minute, so it is going to be risky, that's for sure, any way you try and play this. But looking at it purely from a technical perspective, we've had a nice breakout here. We're holding above that newly formed support, and therefore we could see higher prices over the short to medium term. I guess I'll take a look at dollar yen as well while we're on the subject. So this is dollar yen still making new highs. We are now homing in on 150, and that would be, I think, a nice psychological level for any bulls to target. You can see there we triggered along on our intraday ideas yesterday and looked to be a pretty good strategy. Buying breaks to new highs certainly seems to be working for now, that's for sure. So that is that on the currencies. Obviously, I could look at some others if there are requests, but just focusing on the majors, the ones that are most popular for now. And Steve, I'll pass it back to you, and you can talk us through some indices.
Yeah, lovely. What time does that come out? The figure 7 o'clock, is it, or is it 7
Yeah,
o'clock?
7 o'clock. 7 o'clock
okay.
UK time. Inflation, yeah.
So their numbers have changed really, or the times have changed, haven't they? I mean, they always used to be 9:30, wasn't it?
They did, yeah. They changed a while ago, so it's always before market now.
Yeah. I have to get up
Before
earlier
equity
for them.
markets. Yeah.
Yeah. So that interesting one. So really, how did that affect the indices? Well, FTSE in particular, as it's a UK-based indice. Well, it was negative for the FTSE. Before I break it down right to the hourly chart, let's take a look at what's going on the longer term chart. The weekly chart, we've sort of seen this bottoming out formation, bit of a positive candle well, positive 2 weeks, really. We saw the sell-off last week, which wasn't so positive, bounce from 6,700 area and got above last week's high this week, got above 7,000, but turned around from there. Really need to capture ground above 7,000 to stave off the bears. On the daily chart, you can see it a bit more clearly, formed this nice bullish hammer on last Thursday, so almost 6 days ago, and then an inverted hammer, which is positive as well, and we've seen a nice little reaction higher from there. So it's slightly on the front foot, and we can see how in the last couple of hours we can see price breaking down through support and moving down to retest this this secondary support level. Really needs to hold, in my opinion, above these horizontal levels here. So if we manage to hold above 69.10, shake off those CPI, those inflation worries. Remember, the FTSE is predominantly there's a lot more dollar influence in there, dollar profits in there. So really affected by what the dollar's doing as well. But it seems to be bouncing quite nicely from the low that we've got down to 69.33. It's back up trading at around 69.47. So on a sort of like a real short-term basis, nice reaction higher from them lows. Taking a look at DAX Germany 40, this is one I looked at yesterday in the gun to head challenge that we do, which didn't play out too badly, but I didn't sort of like capture the gains that were potentially offered during the day. But I think I still finished on side on that. But we're having a nice little turnaround. This inverted hammer here from the week of Monday of the 3rd of October has formed a base, and we're reacting higher. Now there's a couple of fibs in here. Let's take that one out so we can clearly mark the next real levels of resistance on here from a more medium-term basis. 13,343, still got potential on the upside. The high formed yesterday, 12,946. Really looking for the bulls looking for a break above there to get some momentum up, to build up to try and challenge this downward trending resistance on the weekly chart. Otherwise, we remain bearish. On the 4-hour chart, quite interesting. We've got up and we started to post hanging man candles. These are the candles that sort of like have a long tail below them. So they try and push towards the highs, find resistance, and then close lower. And they also retest these sort of like the really sort of more short-term support area, which is coming in. I'll show it on the hourly chart in a minute. This hanging man candle here is quite significant, followed by a bearish engulfing candle, and under a bit of pressure at the moment. These candles, this starts at 7 o'clock, finishes at 11 o'clock. It's a 4-hour candle. So breaking it down, the Germany 40, we have got potential for a double top formation. We've got the high here and the high here, and the neckline will be here. That the neckline is the low that's formed in between the two highs. So a break of, and that it's obviously significant. This has been tested on 5 occasions now, 12,742. So if you're a little bit more patient than I am, you'd wait for a break of there and a close below that level to confirm that the bullish move has potential for a much deeper correction. Otherwise, in between, you could look to, if you're a contrarian trader, you could look to buy in front of this support level. If you're still convinced for more upside, buy in front of this support level with quite a tight stop, and that gives you really good risk reward. For the reward is potential for a reverse higher back towards them highs. So good potential there on the DAX on a short-term basis. Daily chart, just to remind you, we had this Fibonacci projection higher targeting 127.20. That hit it, that nailed it basically today, or got very close yesterday. And yeah, the support really coming in now around about the 12,700 level on this chart as well. So quite significant, and you can see from this previous move from 13,570 all the way to the lows, we've also got a 61.8% fib coming in there at 12,897. So a couple of reasons to maybe contemplate that this ABC correction has stalled and further downside is expected. So I spent a bit of time on the DAX there because I do find it at quite interesting levels. Now, the weekly chart on the Dow is looking potentially a lot better. We stalled at 28,600 around there and formed this inverted hammer that led to further upside the following week. We're in a third week of gains, got up to 30,800 yesterday. There is potential for further upside. The momentum's pretty strong at the moment. We can see over the last couple of days we engulfed Friday's price action quite easily on Monday, and Tuesday punched higher through the resistance at 30,450 and maybe coming down to retest that previous resistance, which should now turn into a bit of support. So again, interesting levels to watch on the Dow. In a similar fashion, you have got the opposing side calling out for a stop or stall in this market. It's almost like a head and shoulders type formation. I'll draw it on there. It's not a classic one and it's not a very good looking one, but this is the sort of price action that normally tops a market. So as I say, the neckline really too acute for me. Almost I'd bring it more to that sort of level. And that looks a little bit more of a classic head and shoulders formation. And you can see, or it may be even sort of like take it to the close and the open of these two candles here. So really that's looking for a break of 30,300 to confirm a breakdown in this rally and a top in place for the short term at least. On the Nasdaq, this looks a little bit more classic as a double top formation as well. Neckline is all the way down here. That's down at 11,030, so a long way off that at the moment, but it's definitely something that the market could move to within a few hours. And S&P probably a little bit more classic on the double top formation and bringing in a neckline around 3,686, 3,686. So they're the levels to watch on the S&P. So yeah, really sort of Wednesday wobble, Wednesday decision time, middle of the week is always for me, it always feels like we've digested the weekend on a Monday, which is always a bit messy. Tuesday, we get a little bit of a momentum one way, and Wednesday is decision time. So for me, it's decision time today. Not a great start with that reading on the inflation side in the UK.
Absolutely. Yeah. Okay. Thank you very much, Steve. Also, decision time for us because we've got to come up with a gun to the head trade. So this is where we pick trades live on the video stream. Each of the ideas that we publish or come up with must have stops and targets. They're all placed at market, and the ideas will expire at 9 p.m. or when stops or targets are hit. In terms of the record keeping of these ideas, it's all done on our TradingView profile. So if anybody wants to check those out, you can signal_center. Yesterday, we placed 3 trades, as Taff was on the video as well. I went long of New Zealand dollar versus the US dollar. I believe I think I was 1 tick offside on this at 9 p.m., which, didn't really go anywhere. Counts as a loss, though, on my win-loss ratio.
Yeah.
Steve was buying DAX, and I believe you were slightly onside at 9 p.m. So well done to you. Taff was selling Bitcoin. His is on another profile, but he nailed it. He was 3.8R on side yesterday on Bitcoin.
Oh wow!
Yeah, so
nice
it did very nicely indeed. So new ideas today. I don't know if you've got anything ready, Steve, or you want me to go first. I've got something good to go, I think.
Yeah, go on, you go.
Okay, so I'm looking at gold, and I don't actually think I've traded this very much on the gun to the head challenge over the few years that we've been doing this now, but just going through all the charts this morning was one that stood out because there was a kind of a clean break of support, certainly on the intraday chart. This is the hourly chart on gold. As Steve went through on his analysis, it was trading in a pretty tight bearish channel with no real sign of it changing course anytime soon. In terms of support here, we saw a swing low from the 14th of October, and we are trading below that at the moment. This is an hourly candle, so ideally I'd need it to close below this level at 9 o'clock in order to confirm that. But I've got a gun to my head and I've got to do something, so I'm going to go with this now, on the hope that it does continue to move to the downside, indeed close below that level at 1640. So I'm selling it at the current price of 1639 spot 6. I've got a target down at 1615 spot 40 and a stop loss at 1648.23. It is highly speculative. As I say, I would prefer to see it below that support level, and it may just get faked out here. But I had to do something, and this is what I went with. I panicked. I'm gone short of gold. I'm going to get it published now before I get stopped out. So that is my idea today.
Excellent, thanks, Joe. My idea today is I'm going to go with what I built up yesterday. The weekly momentum on the Germany 40 still positive. We're still above that spike high that we got for the week of 3rd of October. We're getting down towards this crucial support level. It has to hold this, so this allows me to really sort of be punchy with the risk reward. A break below 12,742 would be a little bit concerning, and if I was a big bad bear, I'm trying to sort of like be a bit different now, then I'd be looking to sell a break of there, but you'd need a close on the alley chart below there. So while I'm on here, I'm looking to, it's getting right down close to
Trade
it.
the
I
break,
love
trade the
this.
break.
No, I'm sort of like thinking, no, Steve, don't trade the break. Don't be a muppet. Go with what's going on in the market. So I'm going to put a stop in very quickly at 695. I'm going to quite a tight stop, and I'm going to go for, is that enough? That's too much. I'm going to go for a 4-to-1 risk reward. Oh, 2,200 ticks. I'm going to go for 4-to-1 risk reward on this. This is where I am, and I'm a different person, Joe. Look at me. I'm
Yeah,
so proud of
I
myself.
don't recognise you.
So buying Germany 40 or DAX at 12,745. Stop at 12,695. Very tight stop. But considering we've had a bit of a sell-off, maybe not so tight. Target to move to 12,945, where I'd get to sell it again. I'm just like,
of course,
making money for fun out of this. So yeah, that's my trade idea today.
Okay, good luck.
Let me publish it before it gets
Yeah,
stopped
let's get it
out.
off the screen quick. Okay, day ahead. So busy calendar today. We've got Canadian consumer prices, another read on inflation from one of the G7 countries, and that's out at 1:30 UK time. 3:30 UK time, we've got the US EIA crude oil inventory numbers. As Steve mentioned earlier, that could create significant volatility in the price of oil. Overnight, we've got the Australian employment report. That's at 1:30 a.m. UK time. And later on today, we've got earnings from IBM and Tesla. So we had some numbers out yesterday, which helped underpin the strength in the US markets into the close. Let's see what these two giants have got later on today. For the rest of the week, is that even this rest of it's next week, isn't it? So next week, we're looking at global flash PMI data. We've got a Bank of Canada policy decision. We've got the ECB policy decision and the Bank of Japan policy decision. So a fair amount happening next week, certainly from a central bank perspective. But let's get this week out of the way first and focus on some of these earnings and big numbers that are out later on this afternoon. Anything else to add, Steve?
No, I've just managed to almost
Cling on
post
to your
this. So
trade.
yeah. Oh no,
All
it's
right.
getting it's breaking. It's broken that level, Joe. Don't know what
Oh,
to do.
no.
What am I doing?
Bring it up again. Oh.
Yeah, look at it. Oh, this is the sort of panic. Don't panic, Mr. Mannering, they say. But yeah.
All right, let's end it now, Steve, before this
Yeah.
gets too messy.
Before it gets too
Have a great
embarrassing.
day, everybody. Bye-bye.
Cheers.